right. I think we might be going. Hold on a second.
Good.
Okay, so hey everybody, it's Lori Patch with the Thomas Group Northwest Real Estate and Maple Valley, and I'm the owner and designated broker of the company. And I'm here today with Kenton Becker. He is a senior mortgage consultant with American Pacific Mortgage Corporation. Kenton and I have worked together for quite a while now, and I just wanted to get him on here and get his opinion or his input on what to do if you're having troubles making your mortgage payment. There's a lot of misinformation out there, I think, and or people just don't know what to do. There's terminology that we don't understand. So just wanted you to take a minute and just explain, what's the difference between forbearance? What does forbearance mean? What are the implications of that, versus loan modification? Some things to watch out for and to be aware of if people are calling their lenders and asking them, what to do when you can't make your mortgage payment or having trouble. So if you could just take a minute and fill us in on that and just share maybe some tips and pointers of to prepare people for when they do have to make that phone call.
Yeah, absolutely. And thanks, Lori, for having me on. This is I'm glad we can connect in this digital format a little bit, get some information out. It's definitely a hot button topic. It's something we're hearing a lot about in the news. And it seems like once it makes its rounds in the news, people start cluing into it a little bit. And then maybe some people are looking at their own budget. They're looking at their own situation with income or their employment. And maybe there's a little concern about making that mortgage payment in the future and what options are out there. The federal government has created some guidelines. The new policy is called the CARES Act. And the CARES Act just puts some regulation on banks that there's certain things they can do and certain things they can't do. The first thing to get into is it does depend on who your bank is. And when I say banks, I'm not necessarily referring to who somebody has their checking and savings accounts with, or even that lender that helped them purchase the home. Sometimes that's not even their bank. What I'm referring to is the servicer, which is just very simply, who do you make your payments to? And that's actually found on your mortgage statement. If you look at your mortgage statement, the name of that bank and their customer service number, that's your servicer. And they would be the ones that you would contact or reach out to if you did need to make a modification or ask questions to. So it's still fine if you want to call I have a lot of clients calling me back as their loan officer that helped them purchase a home, but I'm not necessarily the one that helps them with that modification or that forbearance. I would direct them to their servicer. But yeah, we are seeing a lot of bad information out there. We are seeing even people in the industry, loan officers, realtors, title and escrow, that are giving incorrect information about a payment forgiveness. And that's like the hot button term that we're hearing is, oh, if you can't make your mortgage payment, just don't make your payment. You're fine. Everything's good. And that is not true. People are going to get in a lot of trouble if they just stop making their payment because they heard somebody say that you didn't have to make mortgage payments anymore. So that's the first thing that I want to point out is if you can't make your payment, or if you're just looking at your situation and like, well, I heard that I don't have to make my payment, please do not believe that. That is not good information. That's going to get you into a lot of trouble with lates and penalties, fees, and possibly even the worst, which would be foreclosure. So that's the first thing.
It's number one.
Yeah. The difference that we're seeing is that each servicer, each bank that is servicing your loan is doing things slightly different. The CARES Act, the federal rule only applies to federally backed mortgage servicers. Now, the good news is that most servicers are federally backed. Now, you may have one that's just not, and that's why you do want to call your servicer if you need to do some kind of modification or forbearance, call your servicer. They'll be able to guide you on what options that they have, but most are federally backed. And if they are
how do you find that out? Is there a way to find that out, or do you just call them?
Probably calling is the best. I don't know of, there may be a list out there that lists all of the federally backed servicers, or you might just be able to Google, is ABC Mortgage federally backed? there might be information out there. I guess it would just depend on how large of a company you're working with. If it's one of the larger servicers, there's a good chance they're federally backed for sure. But if they're federally backed, then they are under the rules that the federal government has started to enforce, which is the CARES Act. And that says that they have to be able to provide some form of forbearance or modification during this time frame. They also are not allowed to foreclose on somebody who is not able to make their payments. Now, this is where I get into the, well, wait a second, you just said that if I don't make my payments, this is true. You may not get to the ultimate foreclosure, but if you just stop making your payments, you're going to see those credit hits for 30, 60, 90-day lates because you didn't contact the servicer ahead of time and set up a payment plan. That's the difference.
A lot of times that gets you into more trouble, or it does get you into more trouble by, some people get afraid and they just don't want to do anything, or they just quit or shut down. So that's probably the worst thing you can do is you really do need to communicate with your loan servicer.
Yeah, the worst thing you can do, like you said, is just to say, times are tough. I lost my job. I had a reduction of hours. I can't make my payment. So I'm afraid to call the lender. I'm just going to stop making my payment. It's the worst thing. It's going to cause you a lot more harm. And right now, lenders are not, they're bombarded with these calls. So don't think necessarily that, well, if I call the lender, now they're going to know that I lost my job and they're going to take my home. No. That's the point of what I'm trying to say is that there are now rules in place of what they can and can't do. And so calling your servicer, calling your lender is the first thing that you should do to let them know this is my situation. Now, on that same tune, please do not call your servicer if you don't need it. This is another big thing we're seeing right now. Somebody hears that from a family member or friend, or they just hear it on the media because of maybe wrong information out there that you don't have to make your payments. It's payment forgiveness time. And so they just say, well, that sounds good. I don't have to make my house payment anymore. So they call their servicer, they start the forbearance process, and life's good, right? Well, not necessarily, because number one, they just clogged up the lines for somebody that really did need it. There was somebody that lost their job or somebody that had reduced hours at work, and they really needed to get this forbearance done. But because that person that really didn't need it was sitting on the phone with a customer service person, that's why we're seeing wait times of 3, 4, 5 hours sometimes just to get a hold of someone, because everybody's calling and a lot of those people don't necessarily need it, but they're just trying to take maybe advantage of the situation.
So if you're still working, you still got an income in, or you've got savings to cover your monthly payment, it's really important that we all just do what you can and, continue making your payment. As long as you can do that, keep doing that. Don't automatically just call your loan servicer and ask for that forbearance or loan modification if you don't need it.
Right. And then getting into the pros and cons of forbearance, loan modification. Is it payment deferment? Is it payment forgiveness? Again, we hear all of these different terms interchangeable. The one thing that it's not is payment forgiveness. That's the one term that you may hear out there that's not what it is. They're not saying, well, hey, you just don't have to make your payments for 12 months. What it is a number of different things. And each servicer, each bank, lender, servicer is going to have a different word for it. Some are going to call it forbearance. Some are going to call it loan modification or payment deferment. That's probably the best explanation for what forbearance is it's payment deferment. You're deferring those payments that you were going to make over the next 6 months or 12 months. And you're just throwing them on to either the end of the loan, or in some cases, you have to pay it at the end of that 6 or 12 months. So that's really what forbearance is. That's what we're talking about. We're talking about a payment deferment or delayed payments. Now, what you have to find out, and I just made a video on this on Friday because I'm getting a lot of people asking me about this as well, my own clients and different people I've helped close on transactions. And they're asking, well, what is my bank going to do? What is my servicer going to do? And the answer is, don't know. You just have to contact your servicer to ask them, how are they doing the forbearance? I would say that majority of them that I've heard of and I've seen are they're following the CARES Act ruling, which is that they can defer your payments for 180 days, that's 6 months. And then you can do a one-time extension of that for another 180 days, so another 6 months. That means the max that somebody could defer their payments would be 12 months if they got the regular 6 month and then they did one extension after that. Now, under the CARES Act ruling, it sounds like that's kind of more, you're going to be paying all the payments back at the end of that 12-month period. Now, some banks, I am hearing that they are doing a full loan modification, which is taking, let's say, 12 months of payments that you were going to make, and they're just adding it on to the very end of the loan. So if you owed $300,000 on that house and a year's worth of payments was, let's say, $24,000, you're now going to owe $324,000, and then you don't have those payments for the year. There are some lenders, some servicers out there that are doing it that way. I would say that at the end of the day, that's probably the best outcome, because you're going to get those payments deferred if you need it. And then it's just kind of added into the overall loan that you're paying off over that 20 or 30 remaining years, which is not too bad. That would be an ideal situation. Now, if your servicer is like many servicers we've heard of, which what they're doing is they're saying, sure, you don't have to make your payments for 6 or 12 months. But guess what? At the end of 6 or 12 months, you have to pay us back in full.
That is a huge thing to need to know.
That may not work out for you. And let's just say somebody has an average house payment of, say, $2,000 a month. After 12 months, that's a $24,000 bill you're going to have to pay back in a year. I mean, if you were diligent about saving your money each month and going through that part of the process, that may be doable for you. You can catch up and do that. But for many people I know of that are losing their jobs, employment, they might be on unemployment for a little while, figuring out their way back into the workforce. How are they going to save up $24,000, let's just say, in the next 12 months? So this is the problem that we're seeing with this forbearance topic, is that one, people are just not making their payments because they heard that it's payment forgiveness, and then that gets them into trouble. Or two, they're calling their servicer to say, I would like forbearance. And servicers, their job is to push the paperwork through, not necessarily educate that homeowner on, okay, do you understand what you're getting into? And most homeowners, when they call that servicer, what the servicer does is says, okay, I'll send you the paperwork. Go ahead and fill it out. And once you fill it out, we'll get everything processed for you. They don't even realize that what they're actually doing is deferring those payments until 12 months down the road. You're kicking the can down the road.
That's really going to get people into trouble. So they got to make sure they understand what you're signing. Make sure you read that paperwork.
Yeah, and I don't know. I mean, this is something we'll have to figure out 12 months from now. All of those homeowners that maybe did a payment deferment, and then let's say 12 months from now, they have a $24,000 bill that they can't pay. I don't know how that plays out. I hope that the way that it plays out is that the lender works with them to maybe make their normal payment plus a little extra every month. I hope that's how it works out. That would be the best. But I think also there's some servicers and banks out there that will play it by the book and say, well, if you can't pay that back, we're going to have to issue 30, 60, 90-day lates. That could be maybe a worst case scenario, but it is a scenario that could happen. Yeah. And we don't want to see that happen for homeowners. That's not the goal, is to not have a bunch of homeowners that can't make their house payment or have to walk away from their house. We don't want that, as we know. So
good information, very good information. So yeah, I think knowledge is power. So there are a lot of people that are struggling or on the verge of struggling and not quite sure what to do. So this is great information to, it's important to educate ourselves on what these terms mean and what the implications of all of that mean. So thank you so much for clarifying that. And if anybody has any questions, feel free to reach out to myself or Kenton. We're happy to answer any questions you have and kind of help you walk through that process if needed. And or direct you in the correct places to find the information that you need. So we're here to help. This is challenging times that we're all in, but we're in it together, and we're going to get through it. We always do. So, it'll work out, and just make sure you're aware of the decisions that you're making when it comes to making your mortgage payment and making any modifications to your mortgage. So thank you so much. I appreciate you coming on and taking a few minutes and sharing that with us.
Absolutely. My pleasure. I want to get the word out there to as many people as possible.
Yeah. Alrighty. Thanks, Kenton. You have a great day.
Thanks, Lori. We'll see you later.
All right. Bye-bye.